Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the crypto market, the stock market, the oil market, maybe even the NFT market, but less so these days. There's other things taking place. Look, we've got a lot of things to discuss today. Interesting conversations to have across the board. Load up for discussion. We've got 2 oil tankers hit in Iraqi waters, all back up to $91. On Hyperliquid, we'll get into some of the evolving situation in the Middle East. As we say, we're trying to keep on top of it as best we can, although it's changing very, very fast. We also had JPMorgan marking down loan portfolios and reducing lending to private groups. We'll explain what that means and why it's important, as it feels like we end towards the end of a business cycle. So we'll try to get on top of that as well. And then on the AI side, Perplexity announces personal computer, personal secure personal secure which works across your files, apps, and sessions on a continuously running Mac Mini. Big update from Perplexity there. We've also got the latest on price action, as always, and market thoughts, and delighted to say we're going to be having a conversation with Matthew Fisher from Katana today, partnered with Katana for today's show, to get on top of what they're doing, the Katana Flywheel, how they took no money from VCs and are building that flywheel out with Katana. So looking forward to that conversation in just a little bit. In the meantime, I've got Legendary in the co-host seat with me today. We're ready to get into it. Just a reminder, friends, before we do, nothing that we say here is financial advice. This market is very, very risky. We do not know anything for sure, so please proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Thursday. It is the 12th of March. How are you doing? How are you feeling?
GM, doing quite well. Another very volatile day in the market. I think that's going to be a continuing trope for, unfortunately, a longer period of time. But apart from that, my Gigabrain GitHub got a massive update yesterday, crossed 100 GitHub stars, which is cool. I think we are the npm package, which is basically the install package, has almost reached 1,000 downloads. So it seems like people are using that. That's fun. That's something I like to now focus my time on to make this thing as good as I can, make it work with Cloud Code, with the Codex CLI and app as well. So that is the stuff that I'm honestly mostly focused on outside of doing the show at the moment.
That's pretty fun. That's pretty fun. As I said, it's nice to get that traction, which I think you're getting. Aside from that, markets are, I mean, I guess this is a nice distraction from the markets themselves. How are you feeling about the markets more generally? Is it still a case of keeping out of its way, not doing too much?
Honestly, it's still that. I know it's not the most exciting answer, but that's the reality. The things I track most are still the gold price to see what's going on there and the stock indices. But apart from that, I'm still not trying to trade the volatility on oil.
Yeah, I think you've got to be a very specific kind of trader to, I mean, look, volatility is good in some ways, right? If you're a directional trader, then volatility is good. But when there's such volatility across asset classes and across, I don't know, when so many different things in the world, the kind of tectonic plates of geopolitics are just shifting in very significant ways, it doesn't feel like people are doing so with the best information. Although it's still worth it. Like, I think I'm still playing around and stuff. I think I'm short the market again today. It's unbelievable how the market just won't go down despite all the news. So we'll talk about that a little bit more again. I'm dabbling a little bit, but my general position is defensive still as well. So look, we're going to get into all of that in a bit more detail today, because we will talk about some further oil strikes, and this time not just in Iran, but it looks like in Iraqi oil tankers in Iraq. So this stuff is kind of spreading. I think there's been a couple more hits formally recognized in the UAE, also in Dubai overnight, being tweeted from official channels. So it's certainly not going away at the moment. So we'll try to get you up to speed as best we can on that, as well as give our general thoughts on how things are moving. So looking forward to it. We'll get into the headlines in a second. Before we do that, I just want to shout out today's partner for the show. Today we're excited to be sponsored by Katana, a DeFi first chain delivering deep liquidity and sustainable real yield. Katana shipped a DeFi super app from day one with spot lending and the treasury-backed stablecoin all under one roof. Katana raised $0 from VCs and is focused on being a top venue for DeFi. More on Katana later in the show. So let's get into it, starting with the price action as always, starting with Bitcoin. Bitcoin is up percent, back above 70K. Still incredible performance from crypto if you really think about it, how well it is doing in such a volatile geopolitical environment. ETH is up a couple of percent, back over 2K. BNB is up a couple of percent, down to $651. XRP is flat 139. Sol is up 2%, back to $86. So not fantastic by any means, right? We're still down a long way from the highs, but all things considered, you would have thought maybe this would have got affected a bit harder, but it is not now. Maybe in some ways explaining that it's mirroring software. Software got really hit. Bitcoin got hit as well. And now software's potentially bottoming, or people are done with being short. Let's see. Hyperliquid is up 9% to $37 today. Wow. So that one is the one that's continued to move. We've spoken about that as the way to bet on volatility without needing to bet on volatility. Just buy the place, the home of finance that is being traded all over the weekend. We talked about that at the start of the week. On the meme coin side of things, Doge's up a couple of percent. Pepe's up almost a couple of percent. Pengu's up a couple of percent. Pippin's up 3%. SPX is up a couple of percent. Nothing really to write home about here. It feels like these asset classes are maybe getting a little bit abandoned in favor of the hot assets, which are traded on Hyperliquid in much bigger volume. If you're following the money and the hot money, that's where you'd go, I think, right now. Getting into the headlines themselves, we will talk about 2 oil tankers getting hit in Iraqi waters, oil back above $90 as a consequence. US launches trade probes into China and EU. Definitely want to contextualize that as part of that first headline. Legendary will take us through those 2 things today. We'll talk JPMorgan marking down their loan portfolios and reducing lending to private groups. I think this is really important against the backdrop of everything that's happening. And so we'll try to explain that too. And then finally, on the AI side, Perplexity announces personal computer, personal secure. These apps and sessions are going to be running continuously on your Mac Mini. So pretty cool update from them. We'll talk about the significance as well. Getting into the rest of the roundup, Ripple announced a share buyback to value the company at $50 billion. Revolut announces a full UK banking license. Kraken announces Kraken CLI, open source single binary execution engine for AI agents and developers. A cross-protocol publishes proposal to evolve the DAO and token structure into a US C Corp via a token to equity exchange. That is why Cross was up 60% today to 55 mil FDV, trying to get equity into the hands of token holders, which I think is interesting. US prosecutors have asked a court to reject former FTX CEO SBF's retrial request. Optimism Labs announces a 20% staff cut. And finally, Fancy Top founder speaks out against allegations of soft rug after intense public investor pressure. A lot of people are complaining there that they've made a ton of money, but it has not been distributed in any way back to original investors, who are now being told that there's no product market fit and the company is struggling. So that is the roundup, guys, to get you up to what you need to know in the last 24 hours. Ledge, before we get to the headlines and before we get to our interview today, what's catching your attention?
It's definitely 2 things, one of which is in the snapshot, and that is Revolut. After all, it's still my favorite bank that I'm using most of the time. It's also great, by the way, if you want to move crypto off ramp that, get another bank account. That for me works really well, and them getting this full banking license, which they've been working on, fighting for years, is a massive step. Just to have some work, because ultimately this is Europe's most valuable financial company, valued at, God, what's valued at 70 bill, I think, or so. That was the number, if I'm not mistaken. And they're rolling out now, as a result of this, new banking services for their 13 million UK customers. Deposits obviously now being protected under the Financial Services Compensation Scheme. And also, as a result of this, they are committed to invest £3 billion, which is 4 billion USD, in creating jobs in the 1,000 high-skilled jobs, and to be more precise, in the UK. So great news. I think people who invested in Revolut, they did a crowdfunding round. I don't know if a lot of people know that, but Revolut did a crowdfunding round as one of its first things back in either 2015 or 2016. And what is that? If you invested £100 back then, that would be worth 82K. So everyone's up massively on that, and they did that for their early customers. So they're probably also very excited if they invested and they see that in roughly 10 years, their little startup investment has turned into a fully fledged bank and has made them quite a lot of money.
That is pretty cool. That's pretty cool. I find a lot of I've rarely dabbled in the kind of crowdfunding universe. My short experience is that you can get shafted in so many different ways. It's really a lottery on that side of things. I much prefer the angel stuff in an industry that you've got a little bit more of a handle on, that you are a bit more that you are more kind of dialed in on precisely, rather than just going through one of these crowdsourcing things and being like, oh, this seems like a cool idea, let me put in X amount. I think you really got to know the industry that you're getting into. Although, as you say, this is a great outcome. What else was catching your attention, Ledge?
The other thing was to do with Figure, the robotic company we reported on a while ago, and they now have published an update a couple days ago that their Helix robot is now fully autonomously tidying this living room as we're currently sharing on screen. It's a bit slow about that, but it's doing that in a very methodical way. So I thought this is a cool news, and the more I'm looking at this, the more I want to have one of these.
Yeah. So for people who are just listening in, you've got a robot picking up what is it? It's like the stuff you use to clean the surfaces, walking around, picking up the trash. Pretty cool.
And it's
pretty cool.
Like it's not scripted, it's not remote controlled, it's now putting some like very large Lego blocks into this basket. It was like cleaning up from the table, it's moving around with that. It's still slow, but it works, and it's pretty impressive because that means it needs to like in a very, very fast way, like see what's happening around it, interpret that, and then like figure out what it needs to do for that space to be tidy again. So it has to have actually a very deep understanding of its surroundings to be able to do that in an autonomous way. It's not that it has a picture of how the room needs to look like when it's clean, and it's just trying to restore that. It's like life looking at what's going on and what needs to be fixed. So that's actually pretty impressive.
Very impressive. I wonder whether you know how there's these live streams that people put on when they're just relaxing. It's what, or you have background music of, was it like indie-fi or something, or chill lo-fi rap or something, and like these kind of background visuals. Sometimes people put on a fireplace and have in the background. I wonder whether you could have this. Watching the robot go about his business is kind of enchanting, but I guess it's because we are so fascinated with what robots are capable of. It was functionally very, very boring because it's just daily routine chore work, but there's something quite enchanting about watching, like, what's it going to do next? How's it gonna clean this house? I wonder if you could have live streams for watching a robot clean a house. Do you know what I mean?
Yeah, I mean, I think that's actually a great example. I would watch that, like watch a robot. Back in the day when meme coins were still a thing in the agentic era, quote unquote, there was one meme coin. I think it was. No, I don't want to mention the name now. I know the name. I'm not going to mention it. And basically, what they had was a website with 4 screens, and AI agents were just browsing the internet, operating that PC. So basically, what like your OpenClaw, your like Perplexity PC is able to do now in a way more sophisticated way was like very basic back then. And all of them were live streaming, and you could watch whatever they would do, and people were watching that. This is certainly the figure version of that. The more engaging thing. I would totally watch that or have that in the background, even if it's a robot going grocery shopping. And once that stops being excited or like interesting to watch, then probably robots have reached some sort of mass adoption because it's nothing unusual anymore.
Interesting stuff. I think there's a market for that. I really do think there's a market for that. Okay, one thing I wanted to bring up before we get into the main stuff today is, and maybe this kind of feeds into your section on oil and what's going on in the world at the moment, Ledge. There's a cool post here by Kyle, who I really like following as a general kind of trader, thinker, investor. And he shared, I think, was a ChatGPT prepared, or maybe a Claude prepared chart of how different markets are affected by different world events. His tweet was this: anyone conscious enough to remember 1973 is 70 plus years old now, and financial markets are famously myopic or have a short-term memory. Just like how 2021 was the first major bubble since the dot-com, this might be the first major crisis that we are going through right now. The default position from everyone, from what I can tell, this is me talking now, not the tweet, is that everything's going to be fine, everything is always fine, nothing ever happens. The reason why people say that is because nothing's ever happened in the short history of their own individual memory. Obviously, in the history of the world, lots of things have happened, quite a lot. And yes, those type of events only happen every now and again because history is a long duration thing. But there's a non-zero chance that sometimes things do happen. In fact, it's not even non-zero chance. There's a 100% chance that at some point in time there will be a life-altering, world-altering set of events that take place over a period of time. And so I guess some people are starting to ask that question, if this conflict could be one of those things. And I think ultimately everyone's answer to that is we don't know, right? You only know with the benefit of history. But here are some metrics and interesting data points from previous events in history. So you have the Suez Crisis in 1956. The percentage of global supply of oil that was affected was, I think, 10%. Oil price moved 10%. The S&P did not draw down. We're showing these visuals on the screen if you're watching in as well. For the Iranian Revolution, January 1979, percentage of global oil supply was around 4 to 5%. Oil price moved plus 150%, and S&P drew down 13%. The Iraq invasion of Kuwait, this was in August 1990. Percentage of global supply was affected was 7%. Oil price moved 170%. The S&P drew down 17%. So look, I'm not going to go through every single one of these. It includes the Libya civil war, Russia-Ukraine war. It seems to be the case that when the percentage of global supply affected is between 5 and 7, you get double-digit S&P correction down. When it was somewhere where it was more 1 to 2% of global supply affected, like Russia, Ukraine, like Libya, you had a single-digit drawdown. Those two examples, you had a 7% drawdown. Whereas, so for the US Iran at the moment, you've got 6 to 7%. So again, you're in the higher bracket of oil percentage of global supply affected. The oil price has moved up 60%, which I guess is around half of what the oil price move was in these previous big global events where oil price was affected. And the S&P drawdown is 0 currently. So I guess there's a lot of people positioned for this. Maybe some people are suggesting that everyone is so hedged that it's not going to go. But I guess it's just increasing set of data, an additional data point that's starting making people think that we need to see a correction here, because I think what this data suggests is that for the amount of oil of global percentage, for the percentage of global supply of oil that is affected in this specific conflict, you would probably expect, based on historical stuff, and of course there are other factors, you'd probably expect the oil price the percentage move to be 2x what it has done now. And the S&P would need to draw down double digits, basically, according to this data, according to some historical moments. So look, I'm not saying that it's a perfect analysis. I'm not saying that that is always how things play out, because the future is not necessarily a carbon copy of the past. But interesting set of numbers, Ledge. Curious for what you think on those numbers, and maybe you want to go into the first headline as part of that discussion.
It is a very interesting chart. While you were speaking, I was looking up to see if I can find something that explains what the markets did a year after. And Investopedia had basically a similar chart that has the Suez Crisis, all the things you mentioned, Iraq's invasion of Kuwait, 9/11, the drawdown in the S&P 500, but also how the market looked after that. And that's quite interesting. So, for example, you said Iraq's invasion of Kuwait, there was this 17% drawdown, which occurred in 1990, occurred in that year. But a year later, the S&P 500 was then up 14%. Whereas, for example, after 9/11, it took the S&P 500 way longer than just 1 year to recover. But in most cases, the market rebounded pretty quickly a year after whatever happened. Like, even if you go way back and look at Pearl Harbor in 1941, and you had a 20% drawdown, the year after, up 11%. So very volatile, but also very, very quick to recover, with few exceptions.
Yeah, very, very interesting. Okay, take us into the main headline here then, Ledge, as we've kind of already on the topic of oil and what's been going on. There's been some really shocking images from around the world from the last 24 hours in particular, which I think people have become incredibly desensitized to. But look, let's get into it. What do we need to know?
Yeah, oil did move up overnight, went back to $100, touched $100 quickly before it did go down again, and is now trading at $91. And what had happened overnight, which we are sharing on screen, is this footage from oil tankers burning near Iraq after Iranian strikes on them, which is obviously in conflict with Trump's claims that the war is almost over and it's going to be pretty safe to cross the Strait of Hormuz again. And there were two tankers that were ablaze. They were attacked by Iranian boats, which were loaded with explosives overnight. One crew member was killed. At least one crew member was killed as a result of that. Iran also said that the world should prepare for a world where a barrel of oil is $200. And also, if we add these two ship attacks, that now puts us at a total of 6 ships which were attacked over the last 48 hours in the Persian Gulf. So as a result of that, this oil price bottom, which we had seen a couple days ago at $80, has been reversed significantly as oil did climb above $90 again.
Very interesting. So the conflict is clearly expanding beyond maybe the original scope. I thought it was interesting that, okay, first you had this set of attacks going specifically at the GCC, and now some of these tankers are getting hit in Iraq. Did you, sorry, on Iraqi waters, I think, not anywhere else near Iraq. Did you manage to layer in this stuff about the Trump probe into EU and China on tariffs? I feel like there's so much going on at the moment. Obviously, it's hard to keep up with all of these different things, but I feel like this is also quite big news from the geopolitical perspective as well.
Yeah. So just as a recap, there we had the tariff war last year. We had the Supreme Court striking down a key part of President Donald Trump's tariff policies last month, and now what the US has done as a result of that is that they launched a new investigation in some of their biggest trading partners to see if there has been unfair trade practices going on. And if that were to be confirmed as a result of that investigation, that could lead to new tariffs against China, the European Union, India, Japan, South Korea, and Mexico by this summer. This probe could allow the US to impose import taxes on goods from any of these countries if they can prove in their investigation that these countries have engaged in unfair trade practices.
So this is pretty aggressive again from the States, I think. I mean, it's been interesting. As I told you, I've been trying to listen to some more European content as well, because I feel like for the last 4 or 5 years since I've been in this industry, a lot of our information and a lot of our attention has been directed towards the States, and I think rightly so. That's the biggest market, they're the biggest players, biggest people who are affecting the future in many ways. But I have been tuning in more to the European side, and I think there's an increasing movement for the people who are listening in to get some context. Increasing movement, I feel, that is starting to question the strength of the allied status of the United States, because it feels like to the Europeans that is becoming a little bit more of an aggressive relationship, where America is kind of being able to do, well, in some ways it's able to do whatever it wants anyway, right? But I've definitely noticed a frustrated tone and maybe a call for themselves to come together a bit stronger so that they can just be taken a bit more seriously, which there's an argument to say that is what America is arguing for as well, which is that Europe needs to be stronger and therefore needs to do that for themselves. Like even if you were to take American strategy out of it, Europe needs to do that. And I think that they're starting to realize that too. And maybe this will continue that trajectory. Did you have any other thoughts as it relates to markets here, Ledge, or what have you been thinking?
Yeah, it's interesting how strongly this administration is insisting on being right with what they're doing. But I'm also not surprised after seeing Trump 2 for a year, because you probably could have made an argument that in another administration, another country, if the Supreme Court comes to the decision that, look, the way you did these tariffs, the way you did that policy, that's not going to work. That did not work. That was not okay to do it like that. And then you would call it a day. But here they were obviously very quick to figure out another way to potentially get back to imposing those duties. So what that tells me is that what I've been saying on the show, we are probably right to expect more volatility to come, and we'll just have to live with that for the time being.
Indeed. More volatility. Agree. Okay. Got a couple more headlines to get into. First one is this news around, where are we? We're going to be talking about JPMorgan, markdown of loan portfolio. This is the news of JPMorgan Chase's marked down the value of certain loans held by private credit groups as investor worries mount for the $2 trillion industry over deteriorating credit quality. The bank's Wall Street trading division reduced the value of the loans, most of which were made to software firms sitting within the financing portfolios of private credit clients. And JPMorgan views software companies as particularly vulnerable to disruption from AI. We've obviously seen that trade play out over the last few weeks as software has got hit particularly hard. What it means in practice is that by marking down the collateral for that leverage, JPMorgan is reducing the ability of private credit firms to borrow against their loans, and in some cases could even force them to post more collateral. So the moves are described as preemptive as a preemptive step driven by changes in market valuations rather than actual loan losses. So I guess this is trying to implement some type of financial discipline rather than waiting for a crisis. But I guess it's another indication that banks are worried about the state of private credit and therefore are kind of trying to brace themselves in some ways and get their house in order before anything bad happens. Wall Street lenders like JPMorgan act as banks to private credit funds, providing cash using their loans as collateral. JPMorgan had $22.2 billion of exposure to private credit as of a Moody's report from October. So this is pretty big in scale. The move signals JPMorgan is trying to get ahead of potential stress in a corner of the market that has grown rapidly, but now has these headwinds, right? You've got the two headwinds of AI-driven disruption fears and a wave of retail investor withdrawals from private credit vehicles. You've had a couple. So we had, what was the name of it? Was it Blue Water, Blue something? One of these funds a couple of weeks ago that started to prevent withdrawals, and you've had more calls for withdrawals that have had to be halted over the last couple of days as well. So I feel like people want liquidity at the moment. They want their liquidity back. It's just something to keep an eye on. It's certainly not our core part of expertise. There are people saying that this is again another sign of the distress in the market and that it's not great signal. I feel like if you were incredibly overexposed to the market, maybe you'd want to take some off and get your liquidity because it feels like other people are trying to call it back in as well. But maybe if you're reasonably positioned, then then you might be okay. But that's my takeaway, Ledge. I wonder if you have a different one.
Yeah, it's there's been some interesting commentary on that in the Financial Times. So you have on the one hand the co-chief executive of JPMorgan's commercial and investment business, who said, as the world gets more volatile, this outcome should be expected, and also added to that, I'm shocked that people are shocked. And then on the other hand, um, you have private credit executives saying that they had not seen other banks take a similar view as JP Morgan, and quoting the head of one fund in specific that was commenting on Financial Times. He said they have been more difficult the past 3 months, and also added that JP Morgan rarely got rattled, and this is the first time that we've had a little issue. So basically, JP Morgan's read here is that world's getting more volatile. We need to be a bit more wise with that, and that is the policy update result of that.
Just on a personal perspective, this is, again, it's just one of those things where I think, look, maybe you take your money out of the market and it rips and it's fine. But one of the ways I've managed to keep the stuff that we make over the years since I've been in this industry is you just start to ask yourself the question, how would I feel if this really moved against me in the next few weeks? And if the answer is I would feel really, really bad because I'm obviously more overexposed, and if there are all these signs there, personally, it's just my personal take, I would want to be doing the same thing, like being wise over being risky. That is my personal view. But maybe I'm slightly more conservative, even though some of the gains we've made over the last few years have entirely disproportionate. I think there are ways and times to be more conservative. And who knows, maybe it still rips. I mean, the market is refusing to go down as things stand. So I really, really don't know here. But that is my instinctive view when you've got something to protect. We've got one more headline to get into. I just want to shout out our partner for today's show one more time before we get into it, and then we're going to get into our interview. Today, we're excited to be sponsored by Katana, a DeFi first chain delivering deep liquidity and sustainable real yield. It's shipped a DeFi super app from day one with spot lending and a treasury-backed stablecoin, all under one roof, all whilst never raising dollars from VCs. On other L2s, these various apps would be 10 separate apps fighting over the same liquidity. On Katana, they're just one engine. Sushi handles all spot trading as their only major DEX. Morpho handles all borrowing. Vertex provides perps trading. Katana's also seen early institutional traction. Back in October 25, GameSquare Holdings partnered with Katana, deploying a portion of its ETH treasury into Katana's yield, generating vaults via dialectic, showing how Katana appealed to public companies seeking risk-adjusted on-chain returns. Now Katana is expanding to everyone. With Binance Wallet and OKX Earn Live, Katana is paving the way for even more fintech and traditional finance integrations. So you can check out the Katana super app at the link provided. Legendary will stick it in the comments and in the description in just a little bit. So shout out to Katana. We'll be interviewing them on today's show in just a little bit. We've got one more headline to get into before we get there. This is an interesting one on the AI side. So Legendary, let's get into this news about Perplexity. I'm still trying to figure out if I need to get this. So I'm hoping that your news can explain that to me.
All right, let's do it. Let's have a look at what Perplexity has announced yesterday. They announced a personal computer. So basically, what they had announced before, to give a bit more context to what's going on, is this end-to-end workflow, which basically said you have an idea, you want to build an app, you want to code something, you want to publish that. And typically, you would not do that in one step. You would run multiple steps, multiple tasks. And even if you code it with Claude Code or Codex, then you still need to go to Supabase or somewhere else to publish that. So that wouldn't be, for most users, obviously you can build that to be a nice flow, but for most users by default, that would not be a smooth flow. And this is what they had built initially. And now they are taking this a step further by announcing this personal computer, which is basically an open claw-like agentic environment, which is also running on a Mac Mini. with the main difference here being that you are routing all of that through Perplexity service. The setup is supposed to be way easier than that. You can run your local apps, you can run all of that Perplexity flow, which I just described before. And by setting this up on your Mac Mini, this thing is just going to run 24/7 like your OpenClaw instance would do as well. It is not available to play around with personal computer just now. You need to sign up on the Perplexity website for the personal computer waitlist. And what we can currently see on screen is a preview of how that is looking like. It's basically also allowing you, just like OpenClaw, to get your daily briefings. In this case, there's someone looking to hire people and is looking who could be interesting for that. The whole interface of that seems to be more polished. Unsurprisingly, as OpenClaw has been so successful, there's other companies and other entities trying to come up with similar solutions. And I am on the wait list. I haven't had a chance to play with it yet. But to answer your question, B, if that's something that you'd be interested in and wanted to play around with, I think probably the easiest way to like contextualize that is to say that if OpenClaw is Android, where you can do everything, you have to tinker, you can build it to work the way you want it to work. This is more the Apple of AI agents. It is easy to set up, it works, but you don't have probably the same amount of freedom as you would have with an OpenClaw instance. Personally, I will play around with that because I have my Mac Studio just in the back. Can't see it on screen right now, which is running my OpenClaw, which is running a ton of other things. And yesterday I asked my AI agent to have a look at how busy my Mac Studio is with what I do. And my agent said, your Mac Studio is bored. We are just using 6% of its average CPU and GPU compute capacity over the last month. So go for it. Set up more agents, have fun. So this is what I'm going to do as soon as I will move up on that waitlist.
So, okay. I still don't really get this one. So this is for, say you're going to play around with it.
Okay, look at your workflow. Basically, the idea here would be you can do something like saying, okay, this is how I do my research for the snapshot. This needs to be done by this and that time. Obviously, that's a process that you do manually. So you could try to build that with OpenClaw and set up cron jobs and figure out where it needs to research to like give you at least some sort of a framework or a groundwork for the snapshot. And you could also do that with Perplexity's personal computer, for example. And it would be, the idea here is that this is the easier user experience to set that up. Now, of course, you can also do that without OpenClaw, without Perplexity, by just setting up a workflow yourself. But the thing here is that they just want to make that more accessible and easy to use for people who don't want to tinker and be as technical when they want to automate workflows.
Got it. Okay. I like this idea. I like this idea. Just a final question, Ledge, on the agent setup for people who are still figuring out how to leverage agents in the best way possible to improve themselves, to 10x themselves, to 100x themselves. What is your current, the environment seems to be changing so routinely, so regularly. What is your current setup that you like, and how has that changed from before?
My main setup right now is, obviously I use my OpenClaw agent, which has become very sophisticated with the memory layer that I built and with all the things that I do. That's currently running a total of 20 plus something automated cron jobs, helping me to prepare my days, managing my calendars, doing all of that assistant stuff. But then for the like a heavy coding work, I still honestly prefer to do that outside of the OpenClaw agent, because I much rather work in the Codex app, which also has to do with the fact that as a pro subscriber, I can access GPT 5.4 with fast mode, which is 50% faster, but I still also get twice the credits of outside of app usage, as there's like still this promotion period going on. It's really good. And I still use Cloud Code. I think there is no best solution for like use this one app and go, but I think for most people, they would get the furthest with the $20 subscription on Codex, because the limits are really generous and GPT 5.4 is a really good model. But I think it's also important to acknowledge that this performance is not consistent. You will have days where the models perform better. You will have days where they perform worse. And sometimes you will run into a corner with one model. And then if that happens, I was like developing something and completely overthinking that. And it got way too complex, especially as after I did these like Carpathy auto research experiments. And then I did all of that in Codex. And then I went to Claude. I was like, this is what I built. This is what I experimented with. I don't understand what's going on anymore. I think I'm overthinking this. Like, what is the next sensible step to figure out and evolve, in this case, my GigaBrain app? But so to answer your question, automation happens on OpenClaw. Models I mainly use are GPT 5.4 and Opus 4.6 for everything. If I had to choose one, or say one that probably fits most use cases right now, it would be to go with the either $20 or $200, depending on budget, Codex plan, and just work with that.
Good stuff. I think that's super helpful to just check in every now and again because the landscape's shifting so quickly, right? The landscape's shifting so quickly, and people are trying to get a handle on where they should spend their time, attention, and money, because it adds up with all of these various subscriptions as well. So good to get that update. Glad we managed to touch on that, as well as get into the market stuff as usual for today. Now, pivoting into our conversation with Matthew, we announced at the top of the show we'll be talking about Katana today. So I'm delighted to welcome to the show Matthew Fisher. Matt leads institutional and protocol business development at Katana, a DeFi-first blockchain incubated by Polygon Labs and GSR that's laser focused on one thing, making every dollar of on-chain liquidity actually productive. Before Katana, Matt was in DeFi BD at Polygon, and before that served as head of business development at Buttonwood. He's also an active angel investor and advisor across the blockchain space. So we'll get some general views on the market and the future of DeFi as well. So today we'll talk about the future of DeFi, how Katana is trying to solve liquidity fragmentation with its Flywheel model, and what it actually takes to bring institutional capital on chain. So excited to have this conversation. Welcome to the show with us today, Matthew. How are you doing?
Hi, hanging in there. No, it's funny when you're kind of approaching TG and everything. You got obviously you always have like the late nights, early mornings, but especially with the other time zone out east, things can get a little exhausting. So
I can imagine it's all go times. We're going to talk about the token and the TG itself in just a little bit, but just to set the scene for people, I want to talk to you a little bit about DeFi, but maybe a bit about yourself first. Tell us about your trajectory through Polygon, Buttonwood, and DM. What were you doing at these different places, and how did that lead you towards DeFi and give you the focus that you have now?
Yeah, for sure. I've always kind of like loved startups and really been interested in that, and just asymmetric kind of like bets and like upsides. I think I started buying my first cryptos in like 2018. I think randomly bought Chainlink because I thought data would be important, even though I didn't understand like anything kind of like about it. And then we visited in 2020, went from like 50 cents to I think like $10. And I'm like, oh damn, something's going on here. And seeing a lot of people that are really smart from like A16Z, and even I think like Poshmark CEO went to start working in crypto. It was just like so many random like bits here and there.
Did you sell some at $10?
I think I did, yeah. The link
Okay.
marines were crazy. I don't think they were happy with me, but back then, yeah, I got a little bit out there, and I don't know, like it was crazy. You could buy like anything. I thought I was a good trader after 2020, and I just like wasn't at all because you saw like Cardano, XRP, all these go up like 10, 12x. Like it was insane. But yeah, I really felt like Libra had a chance to be, I mean, even if it launched today, right, it'd probably would be the biggest stable coin within like 2 months. Maybe not number one, but probably like right around where Circle is, like very, very quickly. Actually, a lot of the people from Libra went over to Circle after, but just so much distribution, Facebook, WhatsApp, Instagram, that's like 3 billion users right there. That's like way more than anything on chain right now. It's interesting that they're coming back into the space, like recent announcements as well. But I think, yeah, we took, I guess, 3 different jurisdictional approaches. It was like Switzerland and FINMA. CEO of FINMA leaves, and then we went into the Federal Reserve. Through those things, we had 3 different launch days where the engineers woke up ready to like mint the coin, and then like Jerome Powell and everything, like one thing after another, go to the New York State NYDFS regulation, and then like something happens with Andrew Cuomo, and then it's a little close confident. I don't know, not stop rambling. Actually, I haven't really talked about this much live. But anyways, in terms of my journey, I think I always like wanted to be in DeFi, and there's a few people within Libra that wanted to kind of build DeFi, but there's only like so many things we could do.
Just for the audience's context,
Yeah.
Matthew, just explain Libra. I mean, I'm sure many people will be familiar. It was the stablecoin project of formerly Facebook, right? And it was a number of years ago. Just explain like what the objective was, and then we'll get into this DeFi stuff as well.
Yeah, for sure. I think it was a lot of labeling was like to bank the unbanked and try to reach people like all across the world with stable coins, and kind of built its own blockchain called Libra, and eventually its own wallet called Novi in order to do that. And then the idea was to embed it within the WhatsApp, within Facebook and Instagram, and then all of like the Libra association partners. So a lot of the companies back then in like 2020 but working on it went away when FTX and all that kind of thing happened, and now they're like all back, which is really interesting. So Stripe was like a part of the Libra association, for example, back then. You also had like interesting apps like Uber and Lyft were there too, Spotify, and yeah, I think in Spotify's case, for example, one thing was interesting is like how do you kind of like get around the Apple App Store like fee that these distributors charge, and there's like ways where you could basically pay on Spotify, but like on the website that like went through stable coins. Like, I don't know. There's some like interesting like ideas that were there and kind of got planted in people's minds, but just with everything that happened over like those next few years with like government administration, FTX, Celsius, Three Arrows Capital, like I think a lot of those companies tapped out. And then I think over the past year and like over the next few years too, it's like never been more clear that those companies are going to adopt like some of these blockchain rails in one way or another. So interesting time, but yeah, I think that was basically kind of like the goal.
Very, very interesting. So what was the exact reason then that whole project got killed? And is that why you kind of ended up in DeFi? Because you did, even if it wasn't going to work in that particular space, you thought that there's clear this was clear the trajectory for the future.
Yeah, I think why did it get killed? Eventually, it was just how much longer can they wait, like burning a lot of money in some ways, like waiting for the regulation to change. Like it had already been like years after that. The team was actually really, really strong, but again, like people got to kind of move on at some point. I think eventually he was just sober enough to know that there wasn't really a path forward in that time period, in that cycle. I think I would credit like Libra in like China with going harder into the digital yuan to like actually wake people up to stable coins. And then like everything that kind of happened after. But I think a lot of the investments were because of those big things. I think there's just a lot of concerns with Facebook basically going into the US Congress and saying like we want to invent like the new money, right? I mean, that scares me even just saying that out loud right now. There's a bunch of baggage too with Cambridge Analytica before that, with like the Facebook image and all that. So I feel like I was naive then too, that thinking like it would ever go live. I kind of felt like I was so young, and it could be like the next Tesla, like a non-zero chance, right? Like that was like how I was kind of thinking about it. Like, yeah, I'm gonna stay around. Like anything could happen if it does go live. I mean, there's a low probability, right? But I think, yeah, everything in crypto is about taking bets, and that's the taking bet too. And then in terms of like getting into DeFi, I think I spent like a lot. I basically wrote like a 3 or 4 page like paper, like weekly updates on everything that was going around in policy and like a biz development, kind of like news, investor news, and like industry kind of developments. And I definitely saw like the DeFi stuff, the Aves, like that is like what more interesting to me. But I also saw kind of like how slow a lot of like the TradFi institutional space was going to end up having to move just because of like these regulations, and like just not worth it taking the risk. And honestly, too, about like potentially like disrupting themselves too early, which you're kind of like seeing now to come on like 5 years later, right? So, yeah, I just wanted to work for like a smaller team, be really close to how decisions were made. And I think one thing at Libra, we was like a little bit of a victim of, is like everything had to be kind of secretive because there would be like leaks and then that blow up, and that'd be like front page of like CoinDesk, Wall Street Journal, etc. And so if you weren't like literally top 3, top 4 people there, like sometimes you didn't really know what was going on with some of these conversations because they were so sensitive. And so I think like going to, I was like a 6-person startup, kind of like the only technical person after the founder, having like more of an impact on like how things are going, knowing that I wanted to be like a founder at some point was like part of the draw.
Very interesting. I know what you mean. Being in the big organization is much harder sometimes, right? You feel like you can be more impactful in a smaller one. Thinking about DeFi now, and we're gonna dive into the kind of Katana product a bit more in a second. But thinking about the state of DeFi as it stands, something that I've observed personally is that it feels like we've got to a state where a lot of stuff has been built, a lot of stuff is great, but I'm not necessarily sure how new things enter into the environment, because so many things are established. There's a lot of powerful brands out there already. You know, every time a new chain gets created, they just fork Aave, maybe fork some other entities. And lots of people are moving towards cards as well, like payment cards. You know, you attract the capital and then you give people a card. Is that where DeFi is going? So I'm just curious from your perspective, like what is the state of DeFi as you see it now? And where do you think it's moving in the next few years?
Yeah, I was randomly talking to Claude, I think yesterday, the day before. I was like, what are the odds that DeFi summer 2026 happens? I was like, is it non-zero?
Yeah.
I actually randomly said 20-25%, which I was like, damn, that's pretty bullish. But yeah, I think state of DeFi. I think a lot of people that are like still building definitely are sober enough that have been around long enough to know that a lot of the old stuff like won't keep working, right? I think even with us, right, we have this Binance and OKX earn thing that is live on the screen. Actually, might just kind of like dive into that, which kind of talks about like overall some of the way we think about things. And we also got some like flood, or not necessarily flood, a healthy skepticism, I think, in the market, which is so I kind of see the liquidity ecosystem in like 3 phases. So phase 1 is bootstrapping liquidity, a lot of liquid funds, a little bit more mercenary capital that demand really high APYs and are compensated for taking early risks on new protocols with like really high yields that will basically leave once those yields kind of like come down, right? I think phase 2 to us is like crypto native earn distribution and crypto native earn programs. So more retail distribution, a little bit less demand for APYs, and slightly less mercenary than like that phase 1 that I was talking about. And then phase 3 is where we're kind of trying to get to, which is like fintech earn distribution programs, and like fintech and being like the back end for fintech users. And that's the most retail distribution you can have, like the lower demand for APY and a little bit like less mercenary and more sticky, as like these integrations, they're not integrating with tons of these chains, right? And so, yes, like when these kind of campaigns kind of come to an end in crypto, which is like this phase 2 we're in with OKX and Binance, there will be like a good amount of liquidity that like leaves, a good amount of TVL that leaves. It's not permanent. It's like almost a hot ball of money. And I think it's still up to the project to kind of deliver strong native yields and get people to kind of stay. But in a bull market, if you have a bunch of these things, right, users are going from one thing to another in a world where multi-chain is a lot more seamless and easier for people to kind of go back and forth. So like we're sober enough to know that, and we're sober enough to know that like some of the skeptics are around kind of driving, I think it was like 400 or 500 million TVL in like 3 days, which was a lot. For us from where we're at is temporary. But I think for us, it's a little bit different because we see that as just a stepping stone to where we want to go after that. So now that Katana has been kind of blessed by Binance and OKX, we have like now worked with like the biggest brands in the space, have passed security and due diligence, which are very, very extensive. If Brad guy, I don't know if you're named Docs, but I remember seeing you around. So I just, if you guys go through this like mega thing, you'll see. I'm sure you'll have a couple of these programs at some point or another. And I think for us too, it's part of this like vault bridge play. So I don't know if we need to go too deep into like the product and everything, but basically I'll keep it short that one of the core differences on Katana is the USDC, USDT, ETH, and Bitcoin that's bridged from Ethereum mainnet to Katana is lent out on Morpho on Ethereum mainnet. And then all of that yield is redirected to Katana Foundation. And then we direct that as another source of incentives back into like the core kind of DeFi protocols. And I basically just bring that up to say, the fintechs don't give a shit about CAT tokens, right? They don't care about that. What they care about is an extra 2 or 3% on the native yield on stablecoins that they can kind of deposit. And so Katana kind of has that as one competitive advantage where users can come to Katana. They earn the L2 supply rate, and they also earn a portion of the L1 supply rate from like this source of sustainable yield. So we drove like around 3.5 million of revenue through that like mechanism there. So that's like one part of this kind of phase 3. The second part is
let me just jump in here real quick, because like this flywheel is super interesting to see that work in practice. So you said that one of the key takeaways is that what people actually care about is getting some surplus yield on their stable coins. So is this the main thing where you want the Katana flywheel to be focused on, to generate that extra yield and have that as a, like the most prominent messaging here? What else does belong to this Katana flywheel in your view?
Yeah, for sure. I think that's like definitely a big part of it. I think the combination of that plus this like opinionated nature of Katana is like what makes it work. So if you don't have native yield, maybe there's incentive spread across all these protocols. But if you have the combination of that kind of source of native yield plus what we kind of did, and I think there's flavors of it with Mega ETH, but there's also, if you talk to any of these other chains, another story for another day, but they would much rather kind of concentrate on a few great teams and build things around that than they would try to spread things kind of out. So from the day one, I think it's really hard for them to do retroactively, right? Because it's like this whole community of builders. Like Arbitrum is very, very impressive, but they can't kind of turn their back on certain protocols. Not to get too off track from the original question, but basically we have like one core protocol per primitive. So one lending market Morpho, one AMM Sushi, one Perplex, one Launchpad. If you have, and then like we also just wanted to work with like one or two assets kind of per like utility kind of form. So like EtherFi is like the only LSD we work with pretty intentionally.
What was your thinking there, Matthew, for like that, making that concentrated bet on just a few people? I mean, you mentioned Mega, they've kind of got maybe a similar model where they're trying to focus on specific groups. What was your thinking to go in a bit more, I don't know if you describe it as a centralized model. What was your think there? Why would you think that would be advantageous?
Yeah, so it's kind of still answering the rest of his question with your question too. So basically, if you have the combination of like one kind of protocol and one like asset, and then you have this source of sustainable yield, the question is like, how do you do this in a permissionless environment? Like fundamentally, anyone can come deploy on Katana, anyone can come compete. Because of the way that economy is designed, it makes it really, really hard to. Because if you have native yields going into the lending market on Morpho, but you don't have it on other like Aave or something like that, you have CAT tokens and sequencer fees and all this kind of directed into these like user incentives. It just makes it really, really hard to compete. And so I think the combination of having like that yield going in plus the selective nature of it is kind of like what we were like thinking around that. And so when that kind of starts to turn and the flywheel starts to kick, that's like kind of like one source of yield that it doesn't really matter. I guess like to take a step back too, again, like I actually, when I was leaving DeFi and Bunwood, I was like, we don't need more chains. I was like, that was my whole thing, or not my whole thing. That was something I agreed on. That was like also kind of consensus kind of back then. And then I just like really liked the vision of Katana and thought that they were solving for like the same things that I was trying to solve for, which was there's one of the big issues in DeFi is like this level of fragmentation. And I just kind of talked about how we're solving it, but basically there's fragmentation across different chains. There's fragmentation within those same chains about protocols that do the same thing, and then assets that serve the same utility. So when you go to like an Arbitrum, again, like super impressive DeFi ecosystem, like kudos to them for sure. But you have SushiSwap, Uniswap, Ramses, Camelot, and then you have Fluid, Aave, Euler, Morpho, and then you might have a few Perplexes too. And then you have, I don't know, Kelp, EtherFi, Lido. Some of these things are dying, right? But like those are a few of them, right, too. And so now if you're trying to design something like this and you have part of this vault bridge revenue going to 4 different protocols, part of it going to 4 different assets, like that can like really kind of build up. And so what ends up happening is like this yield is a very significant at the end of the day, and then kind of tying it back into the flywheel. It makes it kind of hard for that kind of flywheel to kind of start kicking. Whereas with Katana, we can just say like, hey, we want to subsidize the Ether, Fi, ETH like looping trade with literally with ETH, which is something that we can kind of do that makes it pretty hard for other people to kind of replicate. And again, I think we are like benefiting from chains that have launched before us and people that have built before us. And like we're a bunch of users, we farm certain things. Like we've seen a lot of this kind of stuff come and go. And so I will say that I think it's like it's just kind of taking insights from the blasts and even like other failures and successes from things that kind of came before us. And then we'll say that even if people wanted to kind of launch this today, it's like it's almost like impossible, depending on what chain you're at. If you're already successful, you can't like turn your back on builders. Like the same as what we were just talking about Arbitrum, right? That Ramses and Camelot, those are homegrown Arbitrum protocols. Like, are you really going to like then go say like, hey, we're giving all this to Uniswap, right? Like you can maybe do that and structurally behind the scenes, but that's kind of like almost like suicide in terms of this decentralization and all that stuff that came before us. And obviously that's a whole different conversation on the decentralization and the like messaging on that. But I'll kind of pause there. I actually had no idea how much time we have. I just randomly saw this today. I'm like, oh God, like I'm actually.
We've got another 5 minutes, and so
I think sorry, yeah, okay.
we're good. I've got a couple more questions, I think, as we draw to a close in a little bit. One about the kind of strategy moving forward. You've definitely had some attempts to focus on the more institutional side of things. Then we'll talk about the VC component as well, because I think there's something interesting about you guys in that respect. So back in October 2025, GameSquare Holdings partnered with you guys to deploy a portion of its ETH treasury into Katana's yield-generating vault via Dialectic. How did you get that deal done? I mean, there was a lot of capital going into all of these DATs some time ago, last year. Obviously, maybe some of that energy has dissipated now. But what was it like in that period of time? How did you get the deal done? And to what extent do you think that is part of your future, trying to attract that capital onto Katana?
Yeah, well, so I think what is a little bit overlooked in crypto is 80 to 90% of DeFi TVL is institutional, and about 90% comes from wallets that are worth $1 million or more. Like just
very
like
interesting metric.
That stat right away, you're like, oh, like wow, like okay, like we all love retail and we love our friends and we love community, but like what's like really kind of moving the needle on that front? Like once I kind of heard that, I really realized like how important like the institutions are to chains. And then obviously the several months that came before and like where we are today is like almost like everything that people care about right now is like the institution, and you try to put the narrative, and it's interesting seeing other chains kind of trying to pivot and like own that. But in terms of this GameSquare thing, obviously Ethereum digital asset treasuries were massive last year, and this year you kind of all you kind of see is like one fund in particular down pretty big, without naming names. But I think what the GameSquare thing does is, to be honest, a lot of it is like inbound. We know Dialectic guys for a while. They trust us. I think the other thing that Katana did, which is, again, is like harder for new chains to do, and something that new chains should think about, is no one really wants to try a new AMM right now. Like they want to do something that's been battle tested, has really strong security guarantees. Like who wants to like lose more money on that? I don't want to like discredit everything that Mega ETH's got going on right now. To be clear, like I think there's a lot of like cool things, and you guys are trying to unlock new innovations over there. But I'm saying I was more just kind of coming back to the GameSquare part, which is the protocols on Katana are super battle tested with like large security teams that have been like around for like 5 years. Like yes, like the risk that we had with designing the ecosystem is this thing with key man risk, right? Imagine one of these protocols go down and we only have one of them, it's like pretty much cooked. And so that's why we have, I mean, Polygon security team, we did a lot of stuff kind of started within Polygon, a bunch of internal audits. Like Sushi's pretty rock solid, right? They've been around for 5 years. It's very similar. It's almost like the same thing as UniV3. Morpho, again, like 500 or 600 lines of code, super battle tested. And then like Yearn, super battle tested as well. And so I think part of the reason that we were able to do digital asset treasury and some of these other more institutional focused funds is just the fact that like the security is kind of there. And so I'll kind of just stop rambling again. But yeah,
That's
you guys be a little patient with me today. A lot of distractions and a lot of rambling, but yeah.
All good. And I think that the risk assessment part is super relevant, because if you have a few protocols that you focus on, obviously you would be cooked, as you said, like if one of them were to go down. But the other thing, like we also wanted to ask, is the part that BJ did foreshadow before. On the VC side of things, you decided to raise no VC money at all. What was the thinking here, and how do you think that this will impact the CAT token once you guys TGE?
Yeah, for sure. So I guess typically when you're launching a chain, you maybe have a few like Chad founders, you raise a round, use that to build social status, use a social status to attract talent, use a talent to attract builders, use a builders to attract community, use that to basically close like the infrastructure providers like the Chainlink, the Layer 0, the Fireboxes of the world. Like those, it's very overlooked how hard it is to get them to prioritize you on your roadmap and be there like on day one. That's honestly the biggest benefit I think we had from starting within Polygon as like that idea is like they knew that we would kind of be able to survive and worth it and to kind of take a chance on it. And a lot of relationships were already there. And so they kind of trust that you're like real, whereas you're launching a new chain, like you almost like really need to raise those VC funds, and it can kind of build like the hype and why people should kind of care about you. So I don't like I think everybody would love to say like we raised like no VC money. I think we're in like a little bit more of a unique situation that if we kind of didn't have that incubation partner in Polygon and like also with GSR, like we like might not have like I don't think we would have been able to kind of do this without like raising, right? And we never actually leaned into the VC narrative at all. I think when we were first, and so what Katana is like to finish that kind of like analogy. Basically, you announce a new chain, you do all that kind of thing, then you launch testnet a year later than that, and then you launch mainnet like a few months after that. Katana didn't even get announced until like May 29th of last year, and then launched mainnet like a month and 3 days like after that. Like a very, very quick from public discovery into launch. I think we had a private Telegram group that was like one invite per person in like March, like 2 months before that. But it kind of came, we were building a lot of things pretty much in stealth. And then like when we're public, we were like, let's not lead into the VC narrative. There's always a chance that a VC kind of comes in and we find someone that we really align with, and we just take the check, right? And then we look really dumb. So it's not like, hey, like we're not raising under VC in like any circumstances. And so like we're not trying to like claim that. And we're also not trying to claim that we're hyper liquid, right? Like I think that is another like level that's like differently too. I did send that tweet last week. It like kind of went viral. And then I saw this tweet today. I was like, oh, hey, like they haven't raised any VC money. Like we're not trying to say like, hey, we are like a fair launch aerodrome like that. We think that stuff is super cool. But I will say we don't have the VC overhang in terms of the tokenomics and these other things, which is definitely helpful. And
so tell us what's what's going on with the CAT token then? Like we spoke about this. You mentioned we've got this. Let's share this on screen as well. The initiative that you've had with OKX and Binance. How is that feeding into the momentum for TG? What would you like people to know as we come to close out today's show?
Yeah, for sure. So by nature of Katana, like all this ETH, USDC, USDT, and Bitcoin that's bridged from Ethereum mainnet to Katana is like a dollar that's deposited in Ethereum and also in like on the L2 as well. But importantly, like this campaign is driving revenue for the chain because all of that's bridged over. And this is, I think we got like the 400 million in stablecoin liquidity. If that's generating 3% is conservative supply rate, right? Per year right now. And so that's 100 million is 3 million like a year, just that. And so you multiply that 5, and obviously it's not the full year, but that's like one thing I would mention there. In terms of I think again, like this is just kind of distributing and showing like partners with big brands, and that we kind of have like that capability with the security and the trust, and we have few hundred million that people can come borrow and get active on chain. So we're trying to like use that to boost chain activity heading into launch. And I think part of it is the education thing. Part of it is kind of distributing yield. Part of it is trying to build and educate other users. Again, like we don't have necessarily like the microphone that some of these bigger chains have, and we don't have like the backing of it. So I think this is all like more additive than it might be for others too.
Are you able to say when launch is?
Yeah, I don't know how much like we're really supposed to talk about it, because I think these are just like little microstructure things. But imagine we will have like a decent float like at launch, given we've been around and people have been farming it for a while. So the more clarity you give them, the more that they can time their hedges and on the and all that kind of
Got it.
I will say like March will be a big month, I guess. So within the next like 1 to 2 weeks, I guess I can say that.
Good stuff. Okay. Matthew, it's been a pleasure. Is there anything else you'd like people to know as we close out here? Anything else you'd like to share with us?
Yeah, I would say we haven't announced this yet, but we will. If there's anyone listening that actually holds CAT, we have this pre-staking campaign go live where basically you stake CAT and it kind of shows a little bit of this. So Katana is the first chain to VE33 the whole chain. So the first implementation is on the AMM on Sushi. So if you know Aerodrome and Curve, it's similar to that. We made some innovations and changed some exit fees and some cooldown periods to the thing that's like a little bit more present. But then the idea is to embed that CAT token into the money markets and into yield trading and into perps as well. And so we're trying to basically create this token that has real value accrual in a world where all these tokens like are very worthless almost in terms of all the other chains. And that was like another thing that I was very bearish on when I was thinking about new chains is like, hey, like why are these tokens worth anything? So I think this vault bridge revenue thing plus the utility we're embedding with other stuff is we'll see how like the market responds and reacts to it. So we don't really have any idea like how it's exactly going to work, but it's a genuine attempt at something different in our opinion. And so I think that's what we're going towards, and I can kind of like leave you guys with that.
Sounds great. Matthew, really appreciate your time. It's been very interesting to hear about how you guys are thinking through and trying to create some new, genuine, unique utility for the stuff that you're building. Matthew, it's been a pleasure.
Thanks for putting up my rambling and all that. Have it going, guys. Cheers.
Thank you. Thanks for joining. Right, guys, that is that for today. One more show left of the week. Tomorrow we'll be back, same time, same place. Tomorrow, 7 a.m. Eastern time, live on X Video, YouTube, and you can catch us on Apple and Spotify as well, across all the platforms. So, guys, hope you enjoyed today's show. We'll see you tomorrow. Bye-bye.